Hi everyone. Today we are with a new topic, that is corporate tax. Whether corporate tax will be implemented in the UAE, it is a talk of the town among the business community in this region now. Why there is such a talk now? Yes, there are some new developments happening in global level. It may result into implementation of corporate tax in the UAE also. It may. First, let us understand what are the latest developments happening in global level in this regard. In 1990s itself, the tax authorities from countries all over the world highlighted the threat of tax evasion from growing digital economy. Now, the tax evasion by certain MNEs are at its peak. It is estimated that every year around $240 billion tax revenues lost due to base erosion and profit shifting. That is, shifting of profit from taxable countries to countries where there is no tax, or where even if there is tax but less rate of corporate tax. After years of intensive negotiations to bring international tax system, 136 countries out of 140 members of OECD G20 inclusive framework on BEPS, these 136 countries joined and signed an agreement. This is called the Statement on Two-Pillar Solution. This is to address the tax challenges arising from digitalization of the economy. There are two aspects on it known as two-pillar, Pillar 1 and Pillar 2. It is called two-pillar solution. This ensures that multinational enterprises pay a fair share of tax wherever they operate. What is Pillar 1? It addresses the challenge of digital economy. It is designed to ensure a fairer distribution of profits and taxing rights among countries with respect to largest and most profitable multinational enterprises. This Pillar 1 solution reallocates some taxing rights over MNEs from their home countries to the market where they have business activities, regardless of whether the company have a physical presence there or not. At present, the right to tax is associated with the existence of permanent establishment, that is the physical presence of the entity. However, Pillar 1 allocates a right to tax to the countries even when no physical presence. The second aspect is Pillar 2. What is Pillar 2? Pillar 2 addresses the global base erosion mechanism. It introduces a global minimum corporate tax that countries can use to protect their tax bases. The rate now fixed is 15%. That is a minimum rate of corporate tax global level. The threshold set for applicability of Pillar 2 is similar to that of CBCR application. Everybody knows the CBCR applicability. Hence, the new minimum tax rate will probably apply to companies with a revenue above 750 million euro as a global turnover for the MNE altogether. Pillar 2 solution incorporates two interlocking domestic rules, together known as Global Anti-Base Erosion, that is GLOBE rules, and Treaty-Base rules. These are the two interlocking domestic rules. We will discuss two-pillar solutions in detail in our upcoming video. Going forward, the Global Tax Implementation Plan is scheduled to be finalized by this month. Implementation plan to develop a model legislation, guidance and multilateral treaty is expected to be in the year 2022, and the implementation of the global minimum tax from the year 2023. Coming back to my question again, whether corporate tax will be implemented in the UAE. Since the UAE is one of the inclusive framework member of OECD and agreed to proceed with two-pillar solution, yes, UAE would be required to follow Pillar 2 solution framework. If UAE doesn't implement a minimum rate of corporate tax, the revenue generated by MNEs in the UAE will be taxed by some other countries. Now, we have to wait and see how it will be implemented in the UAE and how, if implemented, how it will be applicable to MNEs, companies registered in free trade zones, and for local companies as well. We will share the updates as and when we get information related to this. Stay tuned for more updates.